but the recent results not that great. But I mean, we're still in the game. They're a massive competitor, yes, but they're not that high of a quality competitor. So there's definitely a narrative where we can get market share, and Stadio can become.
Hello everyone, welcome back to another FinMeUp weekly wrap where we cover the most important stock market news that happened during the week from both JSE and US. At the end, there is something for you where you could potentially win a subscription or a voucher, so stay tuned till the end. Consider liking and subscribing, it really helps out this channel and help us grow. So, the first company is Stadio. So, for those who like the education sector, this one is for you. As you know, there's three main educational plays on the JSE, which is Stadio, Advitech, and Kiro. Personally, my favorite is Stadio, so it was good seeing results. The first semester, students grew by 11%, and their earnings per share is expected to increase between 25 and 37%. Now, these results weren't too great. 11% growth, it's good. There's growth for the first semester, but I think the second semester was around 8%. So there was a bit of a slowdown. It's not huge growth, but something interesting. When you look at Google Trends, I know it's a weird indicator to look at, but Google Trends for business to consumer companies is what I often look at. And if you look at Stadio's results for in Google Trends for January and February, it is much higher than last year. So remember, these results don't include this year's January and February, which is the busy season for students, as that's when they enroll for courses. But if you look at the growth in the Google Trends, do yourself a favor. Say Google Trends, and then you Google Stadio in South Africa. That really makes me optimistic. I'm not too satisfied with the previous results, but looking at the Google Trends, it's not always a direct correlation, but at least it's a good sign. What do you think, Paul?
Yeah, I totally agree with you, Hugo. I'm very excited about this company. I know the market is excited looking at the PE multiple, of course, and some of the valuation metrics, but the recent results not that great. But I mean, we're still in the game. For those of you who don't know, Stadio was started by Chris van der Merwe after he started Kiro. It consists of Stadio, Milpark, and Afta. And the main play here is basically scaling online education in the tertiary space. The main competitor being Unisa, and Unisa has 400,000 students, and Stadio, is not even close to that, not like 10% of that 40,000 odd. So there's a long way to go, and I don't feel like Unisa is, they're a massive competitor, yes, but they're not that high of a quality competitor. So there's definitely a narrative where we can get market share, and Stadio can become one of the biggest, if not the biggest, tertiary online educator in South Africa. So in that regard, I'm very, very excited, and hopefully they can keep the results up. Not looking that great this time around, but it's a long-term play. It's not a 6 months in and out investment for me.
Yeah, I mean, once education is done at scale, it's really a cash flow generation machine. And if you want to know more about Stadio, FinMeUp has written a stock pick on Stadio. Anthony Clark has, and Sol Financial has, all on the FinMeUp app. So you can just search Stadio on the app and read more about that. So now let's look at two financial companies that posted results. The first one being Nedbank and the second one being Standard Bank. For Nedbank, revenue grew by 11%, basic earnings per share grew by 27%, and the board declared a final dividend of R8.66. So, that's a nice dividend for those owning shares. Standard Bank posted also really good results. Headline earnings increased by 37%, and total income increased by 18%. Total dividend per ordinary share increased by 38% to 12 Rand 6. And then the net asset value also, that decreased by 6%. But net asset value, that's not always the best metric to look at, because assets is basically what's on the balance sheet, and sometimes that can be, misaccurately presented. But looking at the profits grew, and that's great to see for both of these companies, Nedbank and Standard Bank. Nedbank growing earnings per share by 27%, and Standard Bank growing earnings per share by 35%. What do you think of these results? Obviously, the high interest rates has some sort of positive effect on them. The bad debts, who knows what might happen over the next year or 2 years with the economic conditions. But if you look at these results, it looks really good. What do you think, Paul?
Yeah, I think once again, you hit the nail on the head there. I don't know these companies that well inside out, but I do know the banking sector as a whole in the macroeconomic sphere. And when inflation is high, of course, interest rates are high to combat that. And high interest rates are very good for the banks. They make money in two ways, or how they make money is a function of two things. The one is the debt that they manage, and the second one is the interest rate on that debt. And of course, given COVID, a lot of people actually acquired new debt because interest rates were very low, and a lot of people obviously already also had debt because most people are in debt, but you had low interest rates. And now we're seeing two years later, the interest rates on that same debt is now way higher. So the banks are pocketing from this. So that's great for them. The flip side is, how do you manage bad debts? Because of course, if you have sustained high interest rates, individuals and companies will start defaulting on their loans. At the moment, it's under control, but I can easily see, 12 to 18 months down the line, if interest rates doesn't cool down a little bit, we might see some serious problems with bad debts, and then that would obviously not be that great for the banks. But for now, it's looking good, and so I want to invest now because I think like the biggest revenue generator has already happened. But I think there might be still a little bit of runway, but I also expect that we see a little bit of a turn down in the next 12 months as the economy starts recovering and interest rates drop.
Next one is one of Anthony's top picks currently. So Anthony Clark, also known as Small Talk Daily, posted an article on the FinMeUp app, his top 3 high conviction stocks at the moment. Harvest is one of the companies that he gave insights on, and quite a comprehensive write-up, so definitely recommend reading that. But Harvest revenue grew by 27%, but profit after tax fell by 32%. Basic earnings per share fell by 34%. So, a lot of revenue growth, 27% great, but the profits took a big hit. And there's various reasons for that, which I'm not an expert on, so I won't comment on that. But I'd really recommend you go read Anthony's article, because he is quite positive on Harvest going into their next financial year. I know, Paul, you follow Harvest to some extent as well. You also posted a stock pick on Harvest, so quite a few insights for the company, for the readers interested in Harvest. But what do you think, Paul?
Yeah, I think for this one, show don't tell. On the app, we've got Anthony, Josh, and also FinMeUp that all post stock picks on Harvest. Short of the long, it's a stock that's really been taking a beating over the last 5 years or so. And now we do see a recovery narrative, and those can be quite brutal in a good way, because how low can you go type of vibe, and it feels like this company has kind of bottomed. There is definitely potential for a turnaround, and our reasons why on the app, go read it.
Awesome. Shoprite, my favorite retailer. I shop there at Checkers. I love shopping there, and it's just an amazing company on how they execute. 66. The extra savings card, their expansion. There's still a lot of growth for them going forward. I know they're acquiring those various stores from, I think it was Massmart. You had a blank on that. But, there's so much growth. They're entering the pet space with pet stores. They're just expanding on so many fronts. But obviously, in South Africa, load shedding. So let's look at their results. So their sale of merchandise, which is basically the revenue, grew by 16.8%. Trading profit grew by 8.6%. Operating profit grew by 18.7%. Then at the end, profit for the period grew by 19.9%. And basic earnings per share grew by 20.9%. The board declared an interim dividend of R2.48. So these results, looking at everything, was really well done. The profits would have been much higher if it wasn't for load shedding. That expense was huge. But this is such a good retailer. Any thoughts, Paul?
Shoprite is the best of the best. These guys operate like no other. So you can never go wrong with Shoprite. The problem here is, of course, inflation and load shedding. So what happens in a high interest, in a high inflation environment? Yes, your top line, your revenue increases, but then with load shedding now, maybe it definitely can sway a few people not to shop, or you closed, let's say 3 to 4 hours a day or whatever. Your cost of sales is a lot higher because of inflation, so your input costs, and then the operational expenses, load shedding. Shoprite has spent 560 million rand the last 6 months on diesel for the generators. That is just ridiculous. So that does impact all our retailers. So that sucks. But if you look at the company and where the company will be in 5 to 10 years, I'm a massive fan. You can't go wrong with Shoprite.
Yeah, so two things to consider. So I don't own any Shoprite shares at the moment, but I am tempted, to average in over the next 18 to 24 months, just as on a consistent basis and dollar cost average or rand cost average, because there is still the challenges. It's a great company. They are expanding, but there's margin pressure from inflation and also load shedding, which is a lot of costs. But looking at long term, I wouldn't mind owning Shoprite for the old days. Momentum Metropolitan, basic earnings per share grew by more than 100%. Operating profit grew by more than 100% as well. Momentum Metropolitan will be covered quite deeply on this YouTube channel. We've interviewed Keith McLaughlin, who's also an expert, and he spoke about Momentum Metropolitan is one of the 5 stocks we covered on the JSE. So stay tuned for that. If you're not subscribed, subscribe so that you don't miss that and put the notifications on. The next company and the final company of the JSE is actually the JSE itself. Net profit after tax increased by 4%, so there's profit increases. Headline earnings per share increased also by 4%. Operating revenue grew by 5%, and the board declared an ordinary dividend of R7.69, which is an increase of 2% year over year. The company maintains a robust balance sheet and cash of 2.2 billion rand. This is a highly cash generative business. If you invest in JSE or in Shoprite or in any of these companies we just mentioned, it goes to the JSE and they make money from those transactions. So, the JSE will probably always be there unless something, I don't know, a black hole scenario happens. But it's not a company that I own. It's just interesting to watch because it speaks volumes. It is a well-run business also. Yeah. Any thoughts, Paul?
Yeah, so the JSE, they don't have a monopoly anymore because there are a few smaller exchanges, but for all intents and purposes, they are the exchange in South Africa. And how they make money is a function of two things. The first is how many companies are actually listed on the JSE, because they get paid for that. And the more companies, the more trading takes place. So that's the two ways how they make money. There's not nearly as many companies as there were a decade ago. Some companies delisted, there's dual listings, they moved overseas, whatever the case may be. So that's not that bullish for the JSE. But there's a lot of people trading. So especially retail investors getting into the game. So I won't necessarily invest in the JSE themselves, but the JSE will always be here. And like you said, if the JSE isn't here one day, then I think you've got a lot more bigger problems than that to worry about.
It's interesting to watch. So let's get to the US. Before we start with the US, we can just look at Apple, Crowdstrike, and Microsoft. On these weekly wraps, we cover mostly JSE stocks. If you want us to also focus a bit more on US stocks, let us know. That way we can speak about more of the US earnings, because obviously there's so many companies posting results very often. So let us know in the comments, do you want us to just keep it like this, mostly JSE, a little bit US, or do you want us to also do much more US going forward? So Apple's iPhone 13 was the best-selling smartphone of 2022. 8 out of the top 10 best-selling smartphones around the world in 2022 were iPhones, according to Counterpoint Research. So, they are just huge. I mean, iPhones everywhere, MacBooks everywhere, iPads everywhere, and then they've got the entire service thing that they are just cross-selling. For so long now, I want to own Apple shares, but I'm not buying Apple shares because I just feel there's something that still needs to happen with, a quarter or a year where iPhone sales were really, disappointing or something. But they just keep on delivering. It's such a good company, a massive moat. CrowdStrike earnings, another company that's really exciting, but you pay for that excitement. It's really, expensive as well. Earnings per share of 47 cents, beating expectations of 43 cents. Revenue of $637 million, beating expectations of $625 million. On the FinMeUp app, we've also written a stock pick under the FinMeUp brand about CrowdStrike, so you can learn more and read more about CrowdStrike. CrowdStrike is also in one of the FinMeUp basket Easy Equities. If you don't know what that is, if you're on Easy Equities, go to the Easy Equities platform, look for basket for JSE and US, and you can see the different baskets we have. One of them being AI, data, cybersecurity, and next generation technology. So CrowdStrike is in one of those companies, and we'll do another stock pick on CrowdStrike soon to say why. But it is very expensive, but it is such a good company. And then finally, Microsoft. Microsoft has said that its new Bing powered by OpenAI ChatGPT has surpassed 100 million daily active users. I'm one of them. I use ChatGPT on a daily basis. Anyway, any comments on Apple, Crowdstrike, or Microsoft, Paul?
Yeah, I think you covered what I also thought. ChatGPT, I mean, it's blowing up. We all know about it by this time. I also use it. And then CrowdStrike, yes, we've written a stock pick, great company, but like you said, you pay for the excitement. And then finally, Apple. Apple is a monster. Normally, when someone asks me, what do you think about Apple or Tesla, my first response is normally, how much time do you have? Because I can go on forever. So let's not bless the listeners today with that. But Apple is just a monster, and it's Warren Buffett's biggest holding. So he's excited about this company. And once again, it's the age old question: will this company be here in 10 to 15 years, and in what capacity? And in my opinion, Apple is just, they're just perfectly positioned in so many areas: smartphones, AI, metaverse, virtual reality, whatever it may be. They are there and they're ready to take advantage of that. So I will be very surprised if, Apple is not here or not dominating as it is now in 10 or so years. Maybe in the long term, you never know what's going to happen, but they are here to stay, in my opinion.
Who knows what's going to happen, but they are really good at executing. That's one thing that's for sure. Apple and Microsoft is also in one of the FinMeUp baskets on Easy Equities on the Statue of Liberty, because they've been around the block and they've shown what they can do. So that's why they qualified for our theme basket in that aspect. But anyway, for yourself, it is on Easy Equities. Finally, if you watch till the end, well done. Thank you. Let us know in the comments what quest streak you have, or which of these companies is your favorite. One of the comments will be winning a FinMeUp surprise gift, so stay tuned for that. But let us know in the comments which one of these companies do you own, which companies you want us to cover next, or your quest streak. Any of those will qualify for a FinMeUp surprise gift. Hope you have a great day. Thanks for watching. Remember, liking and subscribing really goes a long way. It helps us to grow this channel. Hope you have a great weekend.